If you can give me the next 8 to 10 minutes of your life, I can guarantee you without a doubt, I will make you a better trader and show you how to trade like a pro. But real quick, as always, if you guys do find value in this video, make sure to smash that like button as well as clicking that subscribe and that bell icon. It would mean the absolute world to me, especially because we're getting super close to 100K subscribers. Without further ado, let's hop into the video. Okay, so when it comes to trading like a pro, there are a few things that I want you guys to keep in mind before you ever take a trade. So the very first thing that we need to have is a key level. If price is trading in between key levels, ideally we want to avoid taking a trade. The highest probability trades and the best chance for success is going to come when price is trading at these key levels. Now, once price trades to that key level, we then want to look for a reaction in the market. So if price trades up into a resistance level, the reaction that we want to look for is a bearish reaction. We want to look for bearish candlesticks, inverse hammers, gravestone dojis, bearish engulfing candles, long upper wicks. And if price trades down to a support level, we want to be looking for a bullish reaction. Bullish hammers, long lower wicks, dragonfly dojis, bullish engulfing candles. And finally, the third thing that we want to look for after price gets the reaction is an increase in volume. Because if we trade to a key level, we get the reaction that we are looking for in the market, and plus on top of that, an increase in volume, what that is telling us is that our key level is truly valid. And what I want to do is I want to show you guys some of the trades that I've taken this week that have led to some very beautiful results. But again, keep in mind the three things that we need in order to stay profitable in the market is for price to trade to a key level, we need the reaction, and we need to see an increase in volume. So let's go ahead. Let's start this off by looking at a trade that I took today that profited 100% from my entry. Okay, so if we break SPY down to a 5-minute time frame today, we can see that right off the open, we got this very large move to the downside. So we have this high point right here on the pre-market and then a very large flush down. Now, as price bottomed out right here, I took a Fibonacci retracement tool and I took it from this pivot high right here, the highest point of price action before a large aggressive move down, to the lowest point of price action before price started to bounce. Now, on top of this, if we break it down to a smaller time frame, the 2-minute, we can see that on the 2-minute, we actually had this fair value gap right here from this low point to this high point. So now on top of already having our fibs in this area, if we measure the fair value gap right here, we can see that our halfway point is right at this level right here. So as a result, we had a very condensed area and a high probability level that price would react to around like this 591.60 up to 591.8. So as a result, this was an area that I was looking for a rejection today. Now, because this level was so important, because we had multiple confluences between this 20-cent area, as price traded up into the fair value gap as well as the 61.8, looking at the 2-minute time frame, we can see that we got this gravestone doji right here. Now, as price started to trade up into this area, that's when I started to notice a little bit more volume coming into the market, especially when we started hitting this upper wick right here, which what that's telling me is that sell orders are starting to get hit, especially when I was using Bookmap. I have tons of videos showing you guys on how to use Bookmap, but pretty much this gives us a further in-depth way of looking at the market and understanding buying and selling activity. I started to notice that we had sellers up in this area. So as price traded up into it, I started to notice a low elevation of volume, the sellers on Bookmap, we got the gravestone doji, and we had our key level. So as a result, I ended up getting short. As you can see, I even have the screenshots from the Discord. You can see I said, puts pulled up at 7:49 my time, which is going to be 9:49 New York time. I live mountain time, so I am 2 hours behind New York, and you can see that I have my time frame set to New York session. And then from there, you can see that I say in SPY puts, my stop is above 591.9. So as this candle started to close, that is when I got short right here, and my stop loss was if we started to break above that 61.8 and show strength. So my stop loss was right around here. Now from there, I caught this entire move down back into the low of day for about a 5R trade. And again, my contracts from my entry moved 100%. So this is a very good example on waiting for price to trade to a key level, look for the reaction, and look for the volume. Now let's go ahead, let's look at another trade that I ended up taking on Monday that moved about 50%. Now, when it comes to trading key levels, keep in mind the higher the time frame, the more important that level is. So if we're looking at SPY on the daily time frame, again, this was a Fibonacci retracement trade that I took. We can see that we have our clear-cut pivot low right here to clear-cut pivot high right here. Now, as price started to pull back, we could take our Fibonacci retracement tool and draw it from pivot low to pivot high. Now, again, I like to watch the 50% and the 61.8% retracement for a potential bounce. So as we can see, once price traded down into that 50% retracement, you can see that price bounced right off of it. Now, yes, I know this is a red candle. However, why was I so bullish on SPY when we held this level? Well, if we put on the volume, look at the amount of volume that we had this day. So now when we're piecing together our volume price action, we can assume, okay, price just hit the 50% retracement. We had a huge influx of volume right here. What is more than likely happening? Buyers are coming into the market at this 50% retracement level, and they are trying to push price higher. So as the market opened on Monday, this happened on Friday is when we held it. I noticed it on Monday. As the market opened on Monday and we dipped down a little bit, that is when I got long and bought this Friday's calls with a stop loss right below this low. Now, fortunately, or I guess unfortunately, because we're going higher now, but that same day, those contracts ran 50%. And the contracts, they were not cheap. I think they were like $278 when I got in. So 50% of 278, you guys can do the math. That happened the same exact day. And now today, there are still some people that are in the trade. I'm personally not. I stopped out the rest in profits. They're up over 100% right now. But again, this is a very good example of waiting for price to trade down to your key level or up to your key level, and then looking for a reaction and looking for the increase in volume. Now let's go ahead. I want to take a look at one more trade that I took last week, and this was on QQQ puts. I was risking $10 and made $80 per contract, which is an 8R trade. So this trade happened on 11/13, which is going to be this day right here. Now, I personally caught the exact top of the market on this day right here, and I want to show you guys how I found this level. So where this level came from was a 4-hour supply. Now, I don't know why TradingView doesn't show the data correctly, but if we pull up Thinkorswim and we head on over to NQ and we go to the 4-hour time frame, we can see that on this time frame, we have a 4-hour supply zone right here. So we have this very small green basing candle before a very large aggressive move down, leaving leftover supply. So now if we pull up what I was talking about before the trade, you can see that I say shorts potentially on watch at 21268 NQ. Now, as we can see with this 4-hour supply zone, 21268 is the very beginning of it. So we have our small green basing candle, large flush down. What we want to do at this point is wait for price to trade to a key level. At this point, this was my key level. If the market was going to react anywhere, it was at that exact level for a downside move. So now if we break it down to a 2-minute time frame, because this is how I snipe my entry, we're going to have to zoom way back. But we can see that on the 2-minute time frame, as we started to get this very large move up into this supply zone, again, we are waiting for price to trade to our key levels. What do we notice? We get an inverse hammer right off of that level. Now, if we use Bookmap, again, we can see where are the buyers and sellers in the market. So if we pull this up, we can see that I say there is a lot of sellers at this exact 21268 level, which is showing me that this supply zone is truly valid and this is a trade that we want to take. Again, price trades up into it. We start to get a little bit of an elevation of volume as we start hitting those sell orders. And then using Bookmap, we can see that the sell orders are stacked at the very beginning of that supply. So again, this set up for a very high probability trade. So as I shorted, my stop loss, I kid you not, was literally right above the high of this 2-minute candle right here. And I personally caught this trade down into here. Again, the contracts moved about $80 a piece. I was risking around $10 a piece, which was an 8R trade. So again, I can promise you guys, if you start waiting for price to trade to these key levels, whether it be an intraday fib level or higher time frame fibs, supply and demand, support and resistance, wait for price to trade to those, look for the reaction, look for the increase in volume, you're going to be a lot better off in your trading instead of trying to catch all these tiny scalps throughout the day, just based off of like basic 5-minute and 2-minute price action. Again, wait for these higher time frame setups, break it down to a smaller time frame, snipe your entry, and you're going to get a larger reaction out of the trade. And again, these set up for higher probability trades than if you just sit here and scalp a 5-minute and 2-minute setup. But hopefully this video helps you guys out in the future and helps you trade more like a professional trader instead of a gambler. And if you guys did find value in this video, as always, make sure to smash that like button as well as clicking that subscribe and that bell icon. It would mean the absolute world to me. Everybody have an amazing rest of your day, and I'll see you guys in the next video.